was just forgiveness on interest. You don't pay interest payments. Remember, we did that over COVID, exactly the same mechanism, no interest payments. So no interest payments allowed every government who had basically, they'd all gone over 100% of GDP in debt. So all economic activity, all economic growth was used to paying of debts. So what they all did was basically restructure their debts between 3 and 5 years, creating an almost perfect 4-year cycle. And then when you look at the debts today, we're in that 4th year now where the final part, the larger part of the debt is due. And what we found is they start injecting liquidity over a period of 3 years, reaching maximum liquidity. That liquidity injection never really gets taken back. Some gets taken back in the bear market years when they're withdrawing liquidity, raising interest rates, trying to slow the economic cycle because of inflation or whatever. But over time, liquidity keeps rising. It's rising at a rate of about 8% a year. And that is, in fact, the debasement rate of fiat currency. And what happens is, and this is the bit that gets contentious with people and they hate it, if you divide an asset by, basically GDP keeps falling. And it's falling over time, the trend rate of GDP, because of the magic formula. And Julian, if you can get to the demographics charts, because they're the key ones here. The issue is here, the biggest secular factor in all of markets is this one thing, is the aging of population. And we can see the births rate is falling in the US, much faster elsewhere. So that obviously is a function, the labor force participation rate, the size of the workforce, is a function of births, deaths, or the number of people being born, whatever, right? And you hear the phrase demographics of destiny. They are, until the AI and the robots come, which are basically artificial humans. This is the problem that faces us all. But there's a way that they've got around this. If you go to the next chart, is they've increased government debt to offset the declining growth from the population. So part of the magic formula was the debt growth and the other was the population growth. So they've used debt growth. This chart, nobody understands. The amount of time working on the business cycle and the various components of all of this, how it comes together and where we are in timing of that.
And just to reinforce some of what Raoul said, Felix, if you want to pull up this chart on the NASDAQ, I mean, this is including dividends. So this is total return in excess of, our GMI, total liquidity composite. And you can see that it annualizes around 13% in excess of the real rate of debasement. So that's the point, is that 8% is the hidden loss of value from central banks essentially debasing their currencies, which weakens the currency in all financial contexts. And then the visible rise of, let's say prices at the supermarket is, as we know, inflation, right? So you have to kind of bolt that on. That can be 2-3%. But the point is that in real terms, the NASDAQ's making money. In real terms, Bitcoin, if we look back to, 2010 or so, is annualizing around 150%. But if we compare it more recently with the NASDAQ, it's around 95%. So that upper white box you can see in the
fix kicked in as everybody started getting into their 20s. And so we've seen that before. So this way around, our thought process, when we first said it, people thought we're insane, but I think it's becoming pretty obvious that AI and robots are replacement humans. And we're going to have infinite at some point. So the idea is, where does we have infinite? Because that breaks the whole GDP magic formula, right? Nothing makes sense anymore. We call that point the economic singularity. And we kind of finger in the air said, probably by about 2030, because everything is going exponential in terms of speed of AI and robots, we probably have no idea what an economy looks like anymore, or what it means. Everything we all look at is going to fall apart. So we kind of think we've got 5 years, so this cycle and the next cycle. And part of something Julian and I talk about between us too is like, this cycle, people are starting to get it. I think once we get through a pause that refreshes, a contraction in liquidity, the cycle, I think the next cycle, everybody's going to go all in and realize it's the kind of end of times, because we just don't know what's beyond that. Nobody does. Did recently that quite surprised us. Gold is real-time financial conditions. Everyone's like, what drives gold? Suddenly we're like, we've seen this chart. Julie and I were like, something, and gold actually leads everything because it's actually current financial conditions, which kind of makes sense, right? It's the most sensitive to financial conditions. Then you've got the move in liquidity and markets, and the ISM kind of comes behind that. So there's this nice way that you can look at things to give you an understanding. So we all know, in fact, everybody on Twitter now knows that Global M2 leads crypto by 3 fucking months. That chart will be the death of us, as we know.
You guys have created a cult.
And it'll fall apart at some point as well, and then we'll be the worst people in the world, even though we try and tell people. So we've got financial conditions, then we've got M2, then we've got markets, ISM. So there's a nice kind of understanding of where this goes, which allows you to forecast stuff because, again, there's one dominant factor, which is so easy. I remember we've had this weird bifurcation where GDP growth's relatively high, whether that was the hangover from the immigration, the government spending, other stuff. But ISM, which is the guide to the business cycle, has been the longest ever level at 50 or below. So it's telling you that there's a big core part of the US economy that's just not functioning because rates are too damn high, because there's a crowding out from these interest payments, right? This is the actual issue that the Everything Code goes through. That has to get solved, if not the economy. Robo-taxis. And it actually went into a long article. But one of the things we realized is that think of time that you have, your free time. Think of how much of it is doing stuff. Errands, chores, stuff, right? Most of that goes away. It's already, you order food and it comes to your house, but there's a man delivering it or a person delivering it. Soon it will just be a drone or a robo-taxi.
Or a robot riding in a robot taxi.
That's right. Because that's the fastest way for a robot to get from an Android robot to get to A to B is actually in a robo-taxi, which people don't think about. So all of the errands that we could do, I need to go to the dry cleaners. You don't need to do any of it. So I don't know we're going to have a lot more time than we understand. But to do what we don't understand yet, apart from food and stuff. But there is a value exchange. And I think, again, I've been writing about this, that I think it's attention is the currency. As humans, on a human-to-human thing, if you think of love as the top of the tree, that's hyperattention. Singular focused hyperattention. And then you've got attention of, hey, when you've gone with a mate for a drink and you're intensely talking, that's good attention. It feels good. Humans seek that amongst all other things. In fact, that's the most that's why we work for companies and get patted on the back because we've got a promotion. It's attention. So I'm like, okay, maybe we just repivot around the structure of what it means to be a human and drop the money status bits and focus on the attention bit. Maybe that's the signal that social media is telling us, that attention is the currency.
Have you guys seen, we're getting
interacts with each other. And if that's part of universal consciousness, it's just interacting with it. So, yeah, it just feels like it's all the same thing. And that seems weird, but anybody who's been doing like DMT or whatever tells you the same thing.
Yeah.
And it's like, this is fucking weird. And I've not done DMT, but everybody kind of gets towards this thing. And it's like, maybe the bloody Hindus, 5,000 years ago were right. How do they know this shit? It's Q2 2024 so far. But if financial conditions keep moving, if they really have done some sort of Mar-a-Lago accord and they get the dollar below 90, okay, then we're going on further. Maybe it's a full bubble cycle then. Maybe we don't get who knows? But, one step at a time. But looks good.
Well, and just to add one more thing on, if you want to pull up this chart, this is interesting, right? The ISM has been actually tracking pretty closely. It's kind of like the late 1980s, right?
Although it's higher then, right?
Yeah, it's above 50, but it still didn't.
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.